Two stocks I will never ever sell. I shouldn't say never, but those are two stocks in my portfolio, high conviction picks that I own. I'm not planning to sell them for the next 10 years as long as the thesis remains intact. I'm going to talk about them. The first one is a very interesting AI data center bet that has a lot of visibility into its earning. It's highly underrated and it's not talked about a lot on YouTube. The second one is a small cap stock with a massive upside, and I talk about it from time to time, and I'm gonna give you guys an update. And I believe right now I see a very attractive entry on both of those stocks, so I'm gonna talk about them. And if you do enjoy it, all I'm asking is please press the like button and let me know what you think in the comments. Now, the first stock, which is one of my favorite stocks in my portfolio, is Constellation Energy, ticker symbol CEG. CEG has been pulling back recently. It's down 13% over the last months. I talked about it before, and this is good news if you're potentially looking to enter Constellation Energy. Now, Constellation Energy is one of the largest utilities in the United States. They power more than 16 million homes and businesses, providing 10% of all clean power on the grid in the United States, and they mainly do so using nuclear energy. So it's an unregulated utility company that uses nuclear energy to power 16 million homes and a lot of different businesses. Now, I really like the electricity bet and the bet on the grid in general in the United States for many different reasons. One reason is mainly because of the data centers. The data centers are using so much power, much more than countries like Italy, like Taiwan, Australia, Spain, Thailand, Malaysia, Norway. This is absolutely insane, guys. That's just the data centers. And they're taking so much of our power, and it's causing a lot of things to happen, not just in the United States, but across the world. And it's mainly causing electricity prices to rise in a major way. And they did increase a lot from 2022 to now into 2025. They increased so much that based on the latest auction, Constellation Energy is going to see an increase 50 cents in earnings per share for 2026, and they're going to see $1.50 increase in 2027 just because of the massive demand because of the data centers. And this demand is not going to stop anytime soon. You have the data centers, you have the Bitcoin mining operations, you have the Ethereum treasury companies staking those Ethereums and a lot of Ethereum mining companies, and you have so much of this technology and automation that's causing a lot of needs for power. There's not enough power on the grid in the United States to meet all those needs, and those needs are only growing and they're expanding. So I believe one of the most interesting bets of the century is power, and one of the most interesting ones is Constellation Energy. And what makes the nuclear bet very interesting is the nuclear production tax credits. The nuclear production tax credits give Constellation Energy a floor, so a minimum of how much they can charge on prices. So that assures Constellation Energy that they can grow at a minimum of 13% in earnings per share from now to 2032. No other company in the entire market, maybe the REITs, but not even the REITs, have visibility of growing a minimum of 13% in earnings per share from now to 2032 once those credits expire. This is for the old nuclear plants. Any new nuclear plant that comes online based on the recent bill from President Trump, they get them through 2035. And this is inflation indexed. So if we have higher inflation, the growth is going to be higher than 13%. So this is pretty amazing. And because of the demand, CEG is charging beyond the minimum, which is why they're making a lot of money. And that's why it's one of my favorite bets. Now, because there's so much demand, again, for power in the United States, Constellation Energy is signing deals like the popular 3 Mile Island unit with Microsoft. And that was an idled plant. It's been idled for many decades. They're going to bring it back online to power Microsoft's data centers for the next 20 years through a 20-year contract. This is absolutely insane, and it's going to cause massive growth for Constellation Energy. And over the last 2 months, they signed a 20-year deal with Meta to bring in another idled plant It has been idle for many years. They're going to bring it back online and power Meta's data centers and Meta's needs for the next 20 years. And there's many more of those plants that could potentially come online as Constellation Energy is signing massive deals with the hyperscalers, because we desperately need power in the United States, which is why I love the power players and the power kind of utility companies, especially unregulated utility companies, because they can pretty much benefit from volatility and demand. They're not regulated in terms of how much they can cap on prices. They can charge pretty much whatever they want based on the supply and demand dynamics of the markets they are in, which is why I like Constellation Energy. Now, Constellation Energy has entered into an agreement to acquire a company called Calpine, and that should go into the next few months. It should be finalized. The reason why Calpine is attractive isn't just because it's going to make Constellation Energy the largest utility company in the United States by a mile, but this is because Calpine has a natural gas fleet, and natural gas complements the nuclear fleet, because nuclear sometimes has refueling outages, and this is why the growth of CEG is a little bit slumpy if you look at it. So 2024 was a good year. 2026 is not going to be a good year because it's a refueling year. They're going to have more refueling days, which is not too good. But once you have the natural gas fleet, it could take over whenever you have the refueling days, which is why this acquisition is going to be very important for the company and it's going to be a game changer. But in terms of the company's estimates, they expect, as I told you, at least 13% from 2024 to 2030. This is due to the base earnings, base growth, because of the nuclear tax credits. Now, I also told you guys that sometimes CEG can charge way above the floor because of so much demand. This is called enhanced earnings in the green. Enhanced earnings normally adds 20 to 25% on top of base earnings, and on top of both of them, they have at least $2 per year from Calpine, which is going to be immediately accretive to Constellation Energy. So total earnings per share is going to be around $11.70 for 2026, and this is excluding the recent auction, which is going to increase them by 50 cents for next year and $1.50 for 2027. But this is my estimate on CEG. I put in $11.70 for the next 5 years, and I put in 20% earnings per share growth. I think 20% is highly achievable, as they have the minimum of 13% base earnings. Enhanced is 20 to 25%. Then they have Calpine, which is growing on its own. Then they have the PJM auction, which was insane, is going to add massive growth, 50 cents next year, 2027, $1.50. Then they have the Meta deal, and then they have the Microsoft deal, and they could have potential more deals coming online. So 20% growth for the next 5 years is easily achievable from a company like Constellation Energy. Now we got $29.11 in earnings per share. So we take in $29.11. And I told you that the P is at 29. We can use 20 times earnings as a bottom kind of case scenario. And I'm going to time it by 20 times earnings. I'm getting $582 per share. The current price is around $300 per share. That would be around 94% on the upside over the next 5 years with a company like Constellation Energy. And this is using 20 times earnings, not 29 times earnings. Now, assuming I'm right on the mega trend of electricity and power, and the company was able to sustain 29 times earnings 5 years from now, and it could be potentially possible, we can put in this calculation, and I can put in 29.11, and I can time it by 29 times earnings for the best case scenario. I'm getting $844 per share. The current price is around $300 per share. This is more than 181% on the upside, not with some kind of crazy company, but with a utility company like CEG that has visibility of minimum of 13% to 2032 because of the nuclear tax credits. And you have a lot of call options of them signing more deals with Meta, Microsoft, Apple, and other companies to power their AI capabilities and bring on more nuclear plants online. So I like this bet very much. It's my favorite data center AI kind of bet, and I really like it. And I'm going to tell you about the second one. And the second one is a little bit tricky because I used to talk about it when my YouTube channel was much smaller. Now it's larger, so I can't really talk about those anymore. But again, I used to talk about it before. Many of you guys asked me for an update. So I'm only talking about this one, and I'm not going to talk about small caps a lot anymore. But this stock is Mama's Creations, ticker symbol MAMA. I talked about it like a month and a half ago. It was sitting at $8. I told you guys it was a good opportunity. Now it's at $9.40, and I still believe the stock has massive upside potential. Now, Mama's Creations is just a food company, you could say. They're popular for their meatballs, very popular, but they also sell salads, they sell pastas, they sell olive, they sell sandwiches, they sell many different things within deli solutions. They have customers like Walmart, which was a new customer this year in 2025. They sell in Costco, they sell in in Publix, in BJ's, Sam's Club. They sell pretty much everywhere, all over the Whole Foods. They sell all over the place. And they have many different customers, which is pretty amazing. Now, the reason why I like the company very much is mainly because of the CEO, because he's very focused on profitability. And he says his main focus is margin, and then margin. So once he came in, gross margins were 11.9%. Now, gross margins are around 27%. Which is pretty amazing. And the reason why I like such food companies very much is because you have that one truck that's going, let's say, to Publix, and they're delivering meatballs. Okay, the truck is already going there. Then Mama maybe makes an acquisition and acquires a salad company. All of a sudden, they can cross-sell the salad product to a company like Publix at a much lower price because the truck is already going there. So they can save on logistics, they can expand margins, they can give a better deal to Publix. And this is how the company was able to expand SKUs from 1, 2, 3, 4, 5, 6. Now they have an average of, I think, 7 or 8 SKUs with a company like Publix. With Walmart, I believe they have 2, and they can expand them. But the truck is already going there. So if they can put in more products on this truck, this is when you have the massive margin expansion, which is why I like this company very, very much. Now, if you look at the company's financials, revenue growth has been stellar, and most of it has been organic. But if you remember, guys, I told you that cash and cash equivalents have been increasing recently. They went up from 4.4 to 7.2 to $12 million, and that has been decreasing. And I told you guys that the company is getting ready to do a massive acquisition, and I was right about that because the company very recently has acquired another company called Crown One Enterprises. And the Crown One Enterprises, they acquired it for about $17.5 million all in cash. Okay? Now the company Crown Enterprises has generated 56 million in revenue, and it's profitable in 2025. So the company has only paid 0.3 times revenues. So they didn't even pay one-time revenues, they paid 0.3 times revenues. That was a steal for the company, and that's why the stock went up. Now, the CEO used to work at Mondelez. He's well known for not overpaying for acquisitions. He's been waiting to do an acquisition for the last 10 months. He's been waiting for 10 months. And I've been waiting also. But here we go. He did it. And he did it for 0.3 times revenues. And the company is profitable, it's growing, and it's going to give them more access to Cisco's customers. So that's, again, this is insane. And they barely paid $17.5 million, which is pretty much nothing for a company like Mama's Creations. And Mama is planning to do much more revenues, much more, I should say, acquisition. And if you look at the acquisition itself, if you count it within the company's sales, it would have increased Mama's total sales by 40% this year. 40% sales growth for a company like Mama's Creations. And they still have a very good balance sheet to do even more acquisitions, which is what the CEO is planning to do. And the CEO's goal is to reach $1 billion in revenue by 2030. Now, that may seem unachievable because the company is only making $123 million in revenues. But again, the company is going to do a lot of acquisitions. If you look at their 2022 fiscal year, they only had $47 million in revenues. But in 2023, it jumped to $93 million because of the acquisition that the company has made. Because of the CEO, he doesn't overpay, he buys them for dirt cheap, and then he integrates them and he saves on margin and it becomes efficient. So again, this CEO is amazing. Just watch his interview, listen to the call. You can easily be optimistic about the company. But his goal is to reach $1 billion in sales. Okay? I'm going to do a very simple calculation. And we put in $1 billion in sales by 2030. Now, he did give guidance of long-term net income margins of 10%, which I believe are achievable because most food companies have 10% net income margins. Okay, so we time it by 10% net income margin, we get $100 million in net income, and we time it by 20 times earnings, which I believe 20 times earnings is fair for a food company, especially if the food company is growing. And we take in 20 times earnings, we get a $2 billion market cap. The current market cap right now is only $350 million. So we put in the $2 billion and we divide it by $350 million, I'm getting around 471% on the upside over the next 5 years. So this one is one of my highest potential stocks. High risk but high reward, but it's again a food company. They're rapidly growing. They have a recession-proof business model, amazing CEO, skin in the game, and I like the company very much. Now you may ask, what if they don't achieve this goal? Well, even if they achieve half of it, instead of me getting 470% on the upside, I get like 240% in 5 years. This is still not a bad return at all. So even though the stock is up a lot over the last 3 years, and I bought the stock around $1.40, now trading at $9.40, I still told members, and I told you guys all along, at $3, $5, $7, and $8, and I'm telling you now, and I still believe the company is presenting a good opportunity. And that's just my opinion on Mama's Creations and Constellation Energy. If you're interested in more of such ideas early on, you could potentially join my group if you want to consider it. This is the link. But thank you again. Not financial advice. Hope you enjoyed it. And I'll talk to you in another video.